We're back. Let's hit some stocks on the move today. TKO, that's an interesting one to watch. It's up big today after agreeing to sell its UFC rights to Paramount. Joe, you own TKO.
It's a knockout today, Scott.
Oh, Joe, you're good.
But I'm fun.
So good. Thanks, Joe. We're moving on now.
We added this to the strategy at the end of the most recent quarter, and it's been the balance sheet improvement, significant revenue growth acceleration, and the momentum obviously is clear. This is a big deal. I mean, takes it back to CBS. It takes it to an environment where entertainment can be now bundled and purchased. And Jimmy, I'm sorry, but it appears to me that this is what entertainment is for those people not going out west of the desert.
That was a dig at his casino play.
Absolutely, it is. This is the new entertainment. This is what the younger generation wants.
There were many shots on goal there, I will be the first to admit. Where do you want to go, Scott?
We'll go with Cummins, which was upgraded today to outperform at Wolfe Research. Joe T owns that. It's an all-time, or it's a record high today.
It is. Revenue growth of 19%, participating in the AI story. If you think about the data center build-out, power generation can be present there. It doesn't actually have to go out and be acquired, and that's where this company excels.
Let's give Jim one. I don't want him to feel left out.
Why would you do that?
Let's talk about Adobe, which was downgraded today to a sell from hold at Melius Research. Quote, "The world is coming around to the reality that AI is eating software. It could actually get worse. We're downgrading Adobe to sell. We're cutting 26 and 27 estimates. Our target of 310.
Yeah.
Jimmy.
So I'm going to give this one more earnings.
World's coming around to it. Farmer Jim is not.
Yeah, well, here's my take on it. The company has outperformed in terms of surprising on earnings for many, many quarters in a row. They have been buying back shares at this relatively cheap price, now 16 times forward earnings for a software company that's kind of, an asset-like company. That is really cheap. And so in my estimation, it's pricing in what the analyst has said. I don't think it's real news that AI is what's troubling this stock. What I'm saying, though, is so far it actually hasn't shown up in the results. Now, all that said, it's one thing, do you want to be right or do you want to make money? So if we go through one more earnings season where the company outperforms in terms of its earnings and underperforms in terms of its share price.
So you don't think that the questions of AI impact on Adobe have shown up at all in any of the earnings reports since those questions were asked? Were the earnings reports not as strong as they otherwise would have been? I'm not asking you as a rhetorical question. I'm simply asking you what feels like a normal question.
Yeah, but it's a good question, but it's difficult to answer because here's why. Has the growth rate in the top line for Adobe slowed over the last several years? Yes, it has.
But you suggested yourself that it hasn't shown up in the earnings. So you apparently don't feel like it's a difficult question to answer.
I'm sorry, let me rephrase it. Thank you for repeating it back to me. What I'm saying is that this is, yes, thank you, Your Honor, that this is overly priced in terms of the negative impact to Adobe's business. The AI impact is overly priced in. And it shows that to me when every quarter after quarter, they outperform in terms of revenue and earnings. All that said, whether I'm right or not that it's overly priced in, there's only so long that I can go on with this. This is Adobe. It's not a hill I want to die on. End of story.
Well, I mean, you've rolled down that hill.
Yes.
Do you have any injuries?
I just, no. But listen, you're exerting a lot of mental capital in the strategy.
Yeah.
Software revenue growth for S&P software companies is literally the strongest it's been ever, especially relative to other sub-industries. So the idiosyncratic challenges that this company has, you're staying anchored to a position there in such a good environment where you have so many other alternatives. What's like the number one reason? What's the turnaround here? Is it an activist? Is it that they're going to come forward with some AI strategy?
Let me just address it, okay? Because sales.
That's what I'm saying.
Let me address it. I mean, sales, the last 1 year up 11%, last 3 years up 11% annualized, last 5 years up 14%.
That's not enough.
But okay, no, I got you. You're saying that because it's reflecting in the share price. What I will say back to you is, you know me well, all of you do, right? I mean, think about Google. It looked a couple of months ago like I was getting punched in the face for the exact same reason, right? AI and new AI mechanisms were going to eat the core business of Alphabet.
That was more speculative versus fundamental proof. Proof?
I kind of see what you're saying, Scott, but I will tell you that at the time, just let me do this, right? The Alphabet discussion, we were in that day having discussions about this is an existential risk. That's the thing that I
well, because that's
did not
what we
agree
do.
with.
Like Eddie Q made these comments about search.
Yes.
So we asked the question, okay, is this the moment? Is this the existential moment that we need to pay more attention to?
I think it's the same question here. I think it's the same question. You don't think it's the same question?
I feel like that was more speculation. This has been a little more.
So the reason I don't think it's speculation,
based over a longer period of time.
See, I don't think it's fact-based. That's where we're differing, and that's where I'm saying, and I come back to this.
No, the stock's speaking a language here.
You know, I can't control what the stock does, and the company can't control what the stock does. The company can only execute on its business plan, and from that perspective, the facts say that they are outperforming, not from the share price. And at the end of the day, everything we do is about the share price. And I'm not going to go one more quarter with this. I want to get one more earnings report. If we don't see a share price reaction that reflects the fundamentals, or maybe this is the point you're making.
Maybe the multiples.
If the fundamentals deteriorate and justify.
Has the multiple compressed?
Heck yes.
Yeah.
Because of these questions.
Heck yes.
Right?
That's why it's trading at 16 times forward earnings. I mean, 15 times forward earnings.
Yeah.
I'm not making that face to you. I'm making the face 15 times. It's a software company. It's not a factory. It's not like we're churning out cars or something here.